Hey folks, how's everybody doing? Hey, we got a big day today. I pretty well stepped aside when with the tariff threat news coming from the Supreme Court. Uh, we did one trade. I want to do another trade uh, today. Jonathan, let's do a three wide on silver SLV, a three wide on silver. Let's go and put a trade on there. Go out to February 13th. February 13th. Once you do that, and then folks, I wanted to talk about silver because after the 14th, I think silver's going to, the numbers tell me anyway, it's going to go a lot higher. And so I'll be pretty aggressive the night of January 14th, especially in our futures and TNT room there. The day is Friday. We'll come out today. One trade we'll do today for everybody will be the weekend side hustle trade. I like to do that my last trade of the week, but I'm pretty well going to try to take some things, stay in mostly cash today. I'll be back at 1:30 for live trade. Anybody got any questions for me? I'll be glad to answer, and then I'm going to turn it over to Jonathan. I think you're going to enjoy the presentation.
Tommy said Feb 13th. What's for a three Y? What is the price you want to pay?
That's around a dollar, dollar five, dollar 10, something like that.
And you want to target $1.34?
Yep, dollar 34 is the exact number. That's the combination to the money.
All right, folks, let's go out to TNT. We got the same trade in live trading with T-Buzz. Target $1.34 on that trade. Update your target to $1.34.
You got a different, don't you have a different expiration date?
Nope, same one.
Yes. Once you change the expiration date, come in a week. Two separate expiration dates. We already got the same trade out there.
It'll be the February 6th, 74.77.
Yep. Yeah, let's see if I'm right on my timing for that date for silver to really surge after the 14th. One of my students gave me some data, an article I read. I don't know if he's here today, David, and I really enjoyed the article. And I started thinking about it. It took me about a week to come up with this conclusion. I think based on the price action of silver, that's what I'm expecting. We'll see if I'm right. Now, John, if you putting this trade into TNT room?
Yep, every trade we issue during training trade goes to TNT.
So let me understand this. We do this for free and we give people trades also?
That's right.
Man, oh man, that's a good deal. Spread the word, folks. Spread the word. What a deal. They need to join live trading if they really want to get into the serious side of trading. All right, so Jonathan, I'm going to turn it over to you, let you handle it from here. Thank you for being here, folks. I'll see everybody, as I always say, on the flip side, back at live trading later on today.
Hey, Tom. We are live, Robert. We are live. Anybody take that SLV trade? Got a yes, got a trying. Got to fill it $1.02. Okay, thank you. Target $1.34. All right, there's risk involved in trading. If you get filled at $1.05 or less, there's $105 a contract or less on this trade. That's as much as you can lose if you just trade one contract. So risk only what you can afford to lose because there is risk involved in trading. Tom has a very high accuracy rate, but of course, past performance is not indicative necessarily of the next trade, right? So only risk what you can afford to lose. Think of the current trade as one of the next 10,000 is what Tom always says. Just a little, I got to do some work on my end for all the members. So just bear with me here. Tom gave us a opinion earlier. He's expecting silver to have its heyday again here real soon. We'll have a slide about that in the presentation. This is training trade for January, all day, every month, not all day, but every month of January, every day of January, excuse me, during the month of January, 11 a.m. Eastern Time. As we mentioned a moment ago, all trades that Tom issues during this session are sent to the TNT group. That's dtitrader.com/TNT, folks. dtitrader.com/TNT. That's right, Kevin. We sent out a telegram notice this morning that says the Supreme Court has delayed the tariff decision. So we're keeping you, do our best we can to keep you, alert to all the news. That's a good benefit of being here live every day is that we get a chance. We don't have to necessarily send that out through email and telegram, although we do. But Chuck already mentioned it before we went live.
Yeah, although one thing we should make clear, it's not that they delayed the decision. There's a window where the Supreme Court is delivering decisions. This is the first day of that window. Of the decisions delivered today, you get the docket early in the morning. They're going to rule on this, this, and this. The tariffs were not in that. So this was the first possible time they could have ruled on the tariffs. It did not make the list today, but we're going to continue getting Supreme Court rulings for about the next week and a half. So we'll keep an eye on that list each morning to see when that tariff ruling comes out.
Hey, Chuck, thanks for clarification there.
And let's see, Polly, if court rules against Trump, is it negative for the market? Short term, yeah, I mean, it's going to be a disruption. There's no question about that. What does it look like long term? Well, we don't actually know. And the unknown is typically a negative for the market. So I think that's the big issue. Now, when this ruling comes out, there are going to be details to it. It will be nuanced. It's not going to be as straightforward. So, it, listen, I'm going to sit down with some legal experts before I decide exactly what that ruling says.
All right, so the 5 days are done. Yesterday was the fifth day of January, and it was a positive first 5 days from the Almanacs insights. We're 83% of the time going back. I think it was like 50 or 60 years. 83% of the time, if the first 5 days of the year are positive, then it leads to full year gains to some capacity, right? We don't know how much full year gains it is. It just leads to full year gains to some capacity. That's a pretty good success rate. And so that's a positive thing for the market. First 5 days are up. Santa Claus rally was also positive, and it remains to be seen about the full month of January. But if you can get all three positive, that is very good odds for the whole year if you can get all three positive. So January's open on the S&P futures was 69.02. We're trading at 69.97. If January closes above 69.02, that means all three of these indicators from the almanac, they call it the trifecta, will be positive this year. So we'll see what happens at the end of end of January. The dates for the Santa Claus rally are the last I think 3, 4, 5 days of December and the first 2 of January. You have to check the almanac for these specific dates, but I know it was positive. Next Friday, by the way, Jeffrey Hirsch of the Almanac will be joining us at 11. So be sure to be here next Friday. Mark your calendars for that. Let's look at the FTD stocks. I'll get it updated here for us. I'll try to update this during the first half hour, but also when we go live here for this session. Here we go. We got a picture change here, don't we? This morning it wasn't much longs, now it is. Trading at 7,000. I think Chuck, the high is 7,006, right?
7,675 to be exact.
Okay, last time we got up to 7,000, they sold it back off, but we're back up at 7,000. That's good. Because we're up at 7,000, the current price is above the first 3 days high on the S&P, which was 69.91, and because the current price is above the FTD high, it says long up here on the spreadsheet. So everywhere you see long, that means as of 11/14, my last update, that futures or that stock is above the 3-day high. So we got S&P, NASDAQ, we got crude oil, gold, and bonds. We got our indexes, ETFs that relate to those, or cash indexes and ETFs that relate to those markets here. A couple stocks, we got XPI long, we got GLD long, we have Apple still short, Amazon, Google long, Nvidia short, AMD short, Nike is long, and Nuclear is long. Neil typed in the chat, he took an NNE trade based off of Tom's Magic 5 one day this week in the TNT program, and he booked some profits. So great job, Neil, for trading the NNE. All right. And we still have folks getting filled around $1 on the SLV trade this morning just to keep everybody informed. Now that's a spreadsheet. This is slide number 9 this morning on our deck, which I'll post here momentarily. All right, Tom's special topic for the day was going to be on silver. He already mentioned a little bit when he was live a moment ago. All right. Here's some updated numbers on SIL, and we're using the SIL contract in the roadmap software /SIL H26 to be more specific, because the big contract, for whatever reason, is not ticking along active like it should be. So SIL is working just fine. That's why I grabbed the numbers for SIL in this, but that's silver futures. The mini silver futures or micro, one of the two. But the year open is 71.40. Made a high during the first 3 days of 81.48, and it made a low down at 70.50. Now, the high from the first 3 days is only slightly lower than the high for the year, right? The high for the year is 82.58 on the futures. The low is the same from the first day of the year, 70.50. That makes a midpoint for the year of 76.5 or so. And as of 10:50 a.m. Eastern Time, about a half hour ago, silver futures were trading at 79.81. 79.81. Now, since we're talking about silver, and Tom is, you'll see a slide in a moment, Tom's expecting silver to kind of get out of its range and have another heyday, if you will, soon. those high numbers are going to be very important. 81.48, the high for the first 3 days, and 82.58, the high for the year. Right? Whenever Tom says he's bullish on a stock or bullish on any market, doesn't have to be a stock, but a futures market or individual stock, or maybe the QQQ, tech stocks in general, QQQ. If he's bullish on something, what we do and what we think you should do is go find a recent high. Now, Tom may give you that high, so you don't have to go searching for it, but you go search for a recent high to tell you, all right, well, when is some buying really stepping into this stock? That's the goal, at least. All right, so we're focusing in on 81.48 and 82.58, those two numbers on silver futures. Now, SLV, the ETF that tracks price of silver, is great because it has options expiring Monday, Wednesday, Friday, right? Didn't always used to be like this, but SLV has options expiring Monday, Wednesday, Friday. All right. Here's your SLV numbers. You'll notice that the 3-day high of 73.84, right, is the same as the high for the year. So SLV, there was no, whatever day on the futures made the higher high above the FTD high, that happened in the overnight hours. That's what that's telling us. Because the cash, related asset here, SLV, never got above that 73.84. So on SLV, you can set your alert on 73.84. Current price as of 10:50 was 72.68. But here's kind of those were the numbers, and you can set your alerts based on the highs. But here's the big news, and considering Tom's last call on the precious metals and gold specifically a couple years ago, you might want to write this one down. So Tom mentioned today, and he was very specific, which is always surprising, but on the night of January 14th, so if you think about it, the night of January 14th, that will be the January 14th trade day will, already be over. This will specifically be the start of the new trade day for January 15th for futures, but, not trying to confuse anybody. On the night of January 14th, Tom is expecting silver to start to perk up again. All right. Now he's very specific on this, so we're not going to try to jump in early. We're going to wait for his word on January 14th. But he's expecting it to start to surge second half of January. And as soon as that evening, he might be issuing, if we see that surge start to begin, he would start issuing trades for his Futures First program and the T-Buzz Talk and Trade program, both in the Telegram groups there. All right, so mark your calendars for January 14th. That's next week. You don't have to wait too long. That's next Wednesday. All right. All right. So the night of January 14th, it would technically be Thursday's trade day on the futures starting that night at 6 p.m. Eastern time. But definitely, stay tuned in for that because silver's been the hottest market. Tom thinks there's more to go, and we want to pay attention. Now, Chuck, I'm going to turn it over to you to discuss some more key numbers for the month of January.
Yeah, sure. I think basically as we're looking at this month, Jonathan called attention to the FTD the first 3 days, and that is kind of a big deal as we look at the market. And let's see, as far as can we do live view of the roadmap, maybe the daily market rundown? Let's see.
Yep, I can do that. Hang on a second.
If you want, I can probably pull it up on my screen.
Go for it. That'll work great.
All right, so let's do this. Okay, so you guys should be seeing my roadmap right now.
Sure do, Chuck. Thank you.
All right, so a couple things here. We're going to go into an S&P chart. And actually, let me just get to the point where focus on the dashboard here, get this S&P chart. We're going to move this over to a swing view of the market. And you go back to the first day of the year, January 2nd, we see the market place that low in there at 6866.75. Right now, we count up the first 3 days. That's 1, 2, 3, and it just so happens market was moving higher. So the high of the third day, 69.9150, happens to be the highest high of those three, whereas that 66.75 is the low. So that's kind of the ground you're playing in. What we're looking to see at this point, will the market open at some point above 69.9150? Now things stand as they are right now, 69.97. If that's where we open next week, then you've got something moving there. But there's also that question of the current all-time high, the high of the month, which is 7,006.75. So really, when you're looking at this market, it can, if it opens next week above or at the highest high it can, then that becomes very bullish. But as long as we stay below that 7,675, and if we don't open above 69.9150, then Thursday's action in the market, which kind of broke that uptrend, kind of stabilizes this. Now, typically, you guys know that when we're looking at reference bars with the reference bar frame, we always look at the past two bars. We're going to do the same thing on a daily basis here. So even though I'm on Friday, I'm paying attention to both Thursday and Wednesday. So I got that 7,675 number as the highest high of that group, and 69.35 quarter as the lowest low. Now, as I move into the next day, if we assume we close right about here, then my interest is going to be the lowest low of the past 2 days and the highest high of the past 2 days. Highest high will be whatever today's high is. And the lowest low is most likely going to be Thursday's low at 69.35 quarter. So we're always kind of looking to see how the market can advance those ranges. So that's what it looks like in the S&P. Just going to it daily and seeing how this is stacking up. But let's see. I know that some of you guys are big fans of certain stocks. I would do SLV, but I'm going to leave that to Tom. So other than SLV, is there a stock you guys want to look at from this perspective of the first 3 days, the last 2 days, and what sort of trend the market is showing us? Oh, and by the way, one other thing. If you've got your roadmap software, make sure you go to links, DTI Daily, and always make a point of reading in here where we talk about the first 3 days, 69.02, 69.9150, and 68.6675. And then mention in there the past 2 days and looking at what was the big move today when we broke above 69.7775 as the NFP news came out. Nice little flash run there. And it actually happened again at RB3. So we're going to set you up. Now, this part here was written before we knew that the Supreme Court wasn't coming out. So sorry about that one. But also keep in mind, Monday is the start of a new trading day and a new trading week. All right, go ahead and put that back down. And while I was talking about that, I had a whole bunch of suggestions come in. Bruce, I'm not going to do the NVDW. That's the weekly version of NVIDIA. But I'll tell you what, I will look at NVIDIA. And when we look at this is a daily chart. We'll go back and find January 2nd. And you've got the open of the year 189.84. Get that highest high up there at 193.63, and the lowest low, both on the second day, 186.15. So we don't really have a trend in those first 3 days. We just got the market trading inside that second day's range, that Monday range. And today we've broken outside of the Monday range, moved down to 183.70. Past 2 days broke outside of that range as well. So at this point with NVIDIA, if they open below 186.15 next week, then from the FTD standpoint, that's indicating a negative position in the market. Now, I'm not much for shorting stocks, but certainly wouldn't be looking to buy NVIDIA right now. What would it take for me to buy NVIDIA? Well, number one, I've got to get above the high of the past 2 days, which currently looks like it's going to be 191.37. And number two, you'd like to see NVIDIA get above that high of the first 3 days, which is currently 193.63. Oh, Tom was in earlier. He was here a little bit earlier. We're about to start the Genesis bar. And let's see, we've got a whole bunch of other things. SPX, SPX is going to go the same way as the S&P. So not much going on there, but let's see. Someone suggested GE. I haven't looked at GE in a while. Let me go ahead and put this into roadmap. And basically, guys, this is just using the first 3-day algo and using the last 2 days. So with GE, it looks similar to NVIDIA, except that we did have a nice little run up. But like the rest of the market, kind of neutral. Last 2 days is pretty much yesterday. And now we're trading inside yesterday's range. Kind of all over the place here. Okay. Are we able
Yeah,
to...
Rob, I'll post the slides. Yep, sure will.
Yeah, and Jonathan, if you want to go ahead and take it back, I think I've hit all the highlights.
Very good deal. There's the slides for the day, and Rob, I'll post the FTD spreadsheet as well. One of the questions we wanted to answer today was, and we'll add SLV to the list here, but where the options market is implying, I'll teach you how to figure out where the options market is implying the SPY, QQQ, Diamond, other markets, whatever market you want to trade really, where it can move by a certain expiration date. So what we're going to do, we're going to go over to the tastytrade platform just because it's a little bit easier to see than Thinkorswim. All right. And we're going to go out to end of January in this case, just to show you the example here. But let's look, we're looking at SLV right now. That's fine. We're on the options chain for tastytrade. We'll click on January 30th. So it's about 21 days out. But to follow this process on your own, just pick, how far your, expected holding time is, or, just your curiosity. But 72.5 is the current price of the SLV shares. What we'll want to do is we'll want to come down to that strike, 72.5. And then we want to add up the premium for both the call and the put. So I'm just going to left click on the asking price for the call. It's priced at 470. I'm going to left click on the asking price for the put, priced at about 460. And we get a $9.30 premium of those two options combined. All right, $9.30. No, you can do something similar up the top right. It says plus or minus 916, right? But however you would like to do that, we usually just add up the call and put premiums, which equals $9.16 or 30 cents. Excuse me, $9.30. Nice little round number there. Does everyone understand the process so far? Buck says yes. Thank you, Buck. And the process so far, it literally is just pick your expiration date. Okay. Step one, pick your expiration date. how far out to expiration you want to, see what the options are implying a potential move could be. All right, that's number one. Does everybody understand that? Where can the market move out a certain number of days? That's probably the clearest way to put it. Where can the market move based on the options out to a certain day in the future? So I just chose 21 days out, end of January. And I'm going to go to the option chain. So step 2, go to the option chain for that ticker on that date and look and find the current price, which is 72.68. All right. Now, based on the current price, what is the closest strike? I chose 72.50. So everybody understand that so far? Step 1, how far out in time you want to go to see what the options are implying a potential move can be. Step 2, go to the option chain for that date and find the strike closest to the current price. Step 3 is you're just going to add up the premium from both the call and put from that strike. So to quickly do that, more easily do that, I'm just going to call up a buy order for each leg. Buy the 72.5. You could also call up a sell order. It doesn't really matter. You're not placing an order. You're just trying to get the prices. So the 72.5 call is now up to 480 because the price of SLV has gone up some. I'm also going to left click on the asking price for the put. Now, if you're going to do it this way, if you're not just going to visually bring up a calculator, because you could bring up a calculator and say, all right, well, it looks like the midpoint of that call is $4.80, 4.80. And it looks like the midpoint of that put is $4.55, so 455. That's a total of 935. You can do that right on your calculator just fine, on your phone, wherever you have a calculator, do that just fine. But if you try to make it easy on yourself and just call up a fake buy order, you just want to be sure that you're calling up a buy order on the call and the put, right? So buy this 72.5 call for 475, buy this 72.5 put for 455. That equals $9.30. $9.30. The two combined. All right. I'm making a big deal about this because if you call up a buy order for the call, but call up a sell order for the put, it's off. It's not going to be right. So if you're calling up a buy order for the call, make sure you call up a buy order for the put. If you're calling up a sell order for the call, make sure you call up a sell order for the put, right? That's the idea. We're just adding up the premium. We're allowing the platform to do it for us. Call up the same type of order for both sides. And it's 932 now. We're going to bump it down to 930 just to keep it an even round number. So does everybody understand that? Hopefully I explained a little bit better. And as I mentioned, yes, you could just use the number at the top right. It's going to be slightly different. We always teach people to add up the premium of the two legs. All right, so with that $9.30 of premium, what we're going to do is, and I'll show you the actual calculator for this. This part you will need a calculator for, unless you can do it in your head. We're going to take that $9.30 and we're going to add it to our strike. So the strike was 72.5. 72.5 plus $9.30 of premium in both legs. That means the options are implying that come our expiration date, which we chose January 30th, that SLV shares can move up to 81.80. All right. So 81.80 to the upside. We can just call it 81.5 to, keep that nice round number. So I'll type 81.5. SLV upside by January 30th. Now let's do the downside. 72.5, the strike of our choice, or closest strike to the current price, minus that premium of $9.30. And we get 63.20. And again, I'm gonna keep it simple here. I'm just gonna say 63.5 SLV downside by January 30th. So there's your support and resistance, essentially, or targets in either direction, if you want to think about it that way. By January 30th, based on all the options are priced right now. Everybody understand how we did that? That was your final step. So just review. Step 1, decide how far out you want to go to see what the options are implying a movement could be in either direction. Step 2, go to the option chain for that date. Find the strike closest to the current price, so the at-the-money strike. Step 2. Step 3, you're going to add up both the call and the put premiums for that. To get a number, we got $9.30 of the two options combined. Step 4, we're going to add the price to the strike price to get a potential topside target. And we're going to subtract the price from the strike price. We added that $9.30 to the 72.5 strike to get 81.5 or so as an upside target by January 30th. And we subtracted the $9.30 from the 72.5 strike. All right, to get a downside target. Now, a great question from Neil says, does the window indicate any directional bias in any way? Because we're adding up both the call and the put premium, right? We're using both the call and the put premium. This practice here does not indicate any directional bias. But if you look at which side is priced higher, Neil, in this case, the calls are priced higher, there's a slight directional bias to the long side. Calls priced at 480, puts priced at 455, so the calls are slightly biased. Now, it's also important to note that, based on the 72.5 strike, the calls are about 23 cents in the money, right? Whereas the puts are about 23, 24 cents out of the money. So you can see the discrepancy get, pretty skewed one way or the other sometimes, but let's review one more time. So I'll go through all the steps. And let's actually do this with a different ticker. All right. You want to do this with the SPY, the QQQ, or the diamond? Your choice. Type in the first one to type into the chat. SPY, QQQ, or diamond. QQQ. Actually, Jennifer beat everybody out. Diamond. We'll go to the diamond. So we go to the diamond. We're just going to stay with the same expiration out to the end of the month. Okay, somebody playing a joke on me here. We just did SLV, Joseph. That's literally what we just talked about. We'll go back to it though. January 30th on the diamond. That's your step 1. Go out to expiration. Step 2, what's the current price? 494.62. So based on 494.62, what is the closest strike? What is the at-the-money strike? And we're slightly above the halfway point, so I'm just going to use the 495 strike. Price is going to be changing, but I'll just use the 495 strike. We're going to add up the premium from both the 495 call, which is priced at about 595, and the 495 put, which is about 555. All right, 595 and 555. That equals about, let's just make it a round number here at the bottom, 1150. 1150 as our premium of both the call and the put added together. And then we're going to take our calculator out. We're going to take the strike price of 495. We're going to add in 1150 to get a 506.5 upside target. 506 upside on the diamond. And we'll take our strike, 495. We'll subtract out the premium. Oops, I did that wrong. Hang on, 495 minus 11.5. That's 483.5 to the downside. All right. And that's what the options are implying as an upside move or a downside move on the diamond. I'll post the silver again. We went out to January 30th. All right, so think about this, what we just said a moment ago, Tom said on silver, what he's expecting from silver, right? On January 14th, if we do see the silver market start to perk up again, right? And you wanted to trade an option out to January 30th on silver, you could go do this process again. You could go out to expiration, or maybe at that point in time it was, under 20 days and you wanted to get 30 days out or so. You could go out to Feb 13th or the Feb monthly, just to give your options some more time to expiration. And you do the same process. You go, what's the current price? 72.72. That's closest strike is 72.5. The options there are implying a 12.5 point move, so that'd be up to 85 on the stock. And then you can define define your strategies based on that. Okay, well, the options are implying it can move up to 85. Well, that means that I certainly could, trade a 2.5 wide call spread on SLV and have assuming the directional bias is correct, right? A 72.5, 75 gives plenty of room up to 85 to get paid, right? If you didn't want to pay $1 for that 3 wide, or if you wanted to just try to maximize your potential, you could go all the way up to 85 target. I wouldn't recommend that, but this is the goal here. How far can the market move, right? What are the options implying, so we can have a better idea of where to set our strikes in this case, right? Better idea of where to set our strikes. And now there's nothing exact about this. It's just what the options are applying. And what happens to the price of the option all day long and as the days go along? They fluctuate, right? So it's just a general idea of where the options can, are implying that the market can move. It's a great way to kind of get a grip on what, the numbers are saying, give some expectation if your directional bias is correct, and it helps you design your trade and also try to figure out, okay, where might I want to take profit on an option that eventually will expire. Right? It's not like a stock where you can just, potentially hold it forever. It's a very good company, but it's not like a stock where you can trail a stop loss pretty good on something that's trending well. Options, you can't really do that, right? We don't recommend doing that because the liquidity that can arise in the options more easily than a stock, and also, like I just mentioned, they expire. So I have an alert that just went off. I'm going to take a moment, type your questions into the chat. Let me check the alert that just went off on my other computer, and I'll be right back. Yeah, and several people have said, can't you just use the IV number up here? Yeah, you can. It's very, very close. It's never going to be the same, but it's very, very close. $12.33 is what that says up there. You could add, make it a whole number to make your math easier, 12.5. All right, but or you could go lower, 12, if you want to be a little more conservative, or 11. That just gives you a general idea of what the options are implying. So there's a couple different ways to do that. We even have a feature in the roadmap called the predictor that we're actually working on right now to show us the same thing based on the prior day's close. But I wanted to show you today how you can do that on the live pricing. Great question from Brad. Does the accuracy decrease the further out you go? Absolutely, right? By nature of what you're asking there, right? The more time you have to expiration, the more time there is for prices to swing one way or the other, news to come up and affect the market, that sort of thing. So, definitely the more time you add, the more uncertainty you have there in the market. We have a great. Speaking of that, Brad, you might be interested in this feature we have on the roadmap. And let me just bring that up real quick. Make sure you can still see my full screen. Yeah. Let me get rid of this S&P chart. We have, or actually before we do that, in the TNT program, let's go to Talk and Trade. This is the Telegram channel where you see all kinds of alerts posted. At night, this morning, Tom gives an update on the market, kind of a market breadth type posting here from our roadmap custom page. He gives us pivot of the day, 69.55. He gives us Magic 5 stocks. And he gives this posting here. This is called our Moneymaker feature. And what this feature does, it works somewhat similar to the, options market predictor. It's a little bit different. But it says if the S&P gets up to 69.75, and you're focusing on these two numbers here, if the S&P could get up to 69.75, remember this was posted at 5:56 a.m. this morning, but it says if the S&P gets up to 69.75, the SPX should get up to 69.27. Of course, if we were in cash market hours, right? The SPY 691. Some key stocks like Micron 333, Nvidia 186 is taking an implied move on the S&P futures and figuring out, okay, how are these stocks which are currently trading relative to the S&P, where might they be if the S&P makes a move up to 75.35? So this is a slightly different feature, but it's still a fantastic feature we call Moneymaker. And the reason why I wanted to mention it to you, Brad, is because this one is the same sort of situation. It's a fantastic for short-term, correlated moves, right? But the further out you get on this, like if you put a price in here of 7,500, well, it might say Apple, 300 or Micron 400. I don't know. We could actually do that live just to see, but it really doesn't mean much to us, right? Because that's just so far off in price. So yes, to answer your question, hopefully clearly the more out, more days you out, the less accurate it might be because there's just more time for a move to happen, for news to come into the market, like tariff news, right? Marge says, can this be used when we get an up or down arrow on MPI? Absolutely, Marge. When you get any kind of buy signal, you want to know, okay, let me get a general idea of, how far this thing might be able to move, especially when you're trading options like we went through. When you're trading options that have an expiration date, you want to figure out, okay, well, how far can this vehicle move? And again, it's nothing exact, but it is a great little method there to figure out. So yesterday we talked about how to use the ATR of figuring out upside or downside targets. Today we talked about how to use the options market. But let's revisit, before we play today's tape, let's revisit yesterday's education. Let's say what we did is we looked at the ATR, which on the roadmap here is a 14-day simple at 53.5 points. And we added that number into the low of the day. Why the low of the day? Because we're trading at the highs of the day. So we add it to the low. And what we get today, let's see, the low of the day is 69.54 quarter plus 53.5 points. And you get 7,007. And that is probably no coincidence that that's right near the all-time high, 7,675, I think Chuck said. So hopefully you've learned a little bit about the tools that we use each and every day to kind of get a read on the markets. Talked about ATR yesterday, reviewed it just now. And we looked a little bit further out, and much further out than intraday. We looked at the options market to get, how far out you think, or the options apply the stock can move. All right. All right. That was quite a bit to go through. Any last questions before we finish up? The replay is from Train and Trade. If you go to the YouTube channel, which I'm typing in right now, dtitrader.com/YouTube will take you to Tom's YouTube channel. If you click on the live tab, all right, it's literally going to say live on the web page. It'll literally say live. So click when you get there, go to live, and you can find all the recordings. While you're there, if you enjoy these sessions, if you enjoy Tom's education and insights, which we hope you do since you're here, right, on the YouTube channel, hit that like and subscribe button, and you can even turn your notifications on if you have it downloaded on your phone, like a YouTube app on your phone, and we'll alert you anytime Tom goes live. All right, well, we're live every day at 11, Monday through Friday. Tom's live Sunday night at 8 p.m. for his Sunday night planning session. We do that on YouTube. And we're live on Wednesday night at 8 p.m. Eastern time as well. All right, so But like and subscribe to the YouTube channel, and you'll be alerted whenever we go live. And check that live tab on the YouTube channel for the recordings. Now, Tom is going to have a new side hustle trade this afternoon. It's Friday. We always do a side hustle trade over the weekend. So in the last half hour or last hour today, weekend side hustle folks, Weekend Preface Club is what we call it. Expect a new trade. We'll release this afternoon. We'll release the next week of education for the home study course. All right. Tom's got a one-on-one going on, Donna, so we're not going to meet live today, but we will release the 3 more lessons for the home study course. And we've got also kind of a bonus tape, an oldie but a goodie called the penalty tape. Tom did a live presentation for folks way back when, before I even joined DTI. So it must be 15, 20 years ago or so, or now, but it's just, it's funny. He's talking about Central Time, and time is central in that recording. Of course, he's in Eastern Time now. So some things have changed over the years, but his market insights have not changed over the years. And it's a very good listen. We'll send you that home study course, folks. That is a bonus this afternoon as well. All right, folks, we're going to queue up the video. You can learn a little about the weekend side hustle. Learn a little about weekend side hustle. All right. And if I missed your question, just shoot me an email. All right, shoot me an email, and I'm happy to answer it. Tom did give a new trade today on SLV. I'll post that again. It's a 74.77 call spread. We got in at about $1.03 and targets $1.34. We are meeting today at 1:30 for live trading with T-Buzz. So all you live trading with T-Buzz folks, we'll see you there.